Reaction to Basel III here in Europe was swift and largely positive. First off, the stock market. Big banks saw big gains in share prices right from the open, many rising between 1% to 6%. Some of the biggest gainers by the close of play were French banks. Though financial institutions will have to hold significantly more capital on their books, the new rules are not seen as quite as harsh as some had feared. Plus, some banks already meet the new requirements, and banks have a few more years to comply than originally debated. Here in the UK, the head of the Serious Fraud Office, Adair Turner, said the longer timescale means that banks can, quote, play their role in supporting economic recovery. In other words, banks won't be forced to cut back on lending or raise their fees while economies are still so fragile. Though the British Bankers Association says the fixed operating costs for banks will eventually have to rise, and that could make mortgages and other loans more expensive for consumers. Now, other banks may also restrict dividend or bonus payouts to stay within the rules. First out of the gate, Deutsche Bank. It confirmed it will raise more than $12 billion, in part to increase its capital. Now, one sticking point here, several top officials in Europe say they won't implement the new Basel III rules until and unless the U.S. does. Washington has yet to fully implement so-called Basel II. For CNNMoney.com, I'm Jim Bolden in London.
The new global banking rules are expected to have a limited impact on Asia's financial institutions. Analysts say banks out here are generally well capitalized and have learned very hard lessons from the financial crisis of 1997. They say Asian banks now tend to be conservative and are wary of complicated financial instruments. Some analysts say that the most vulnerable are Japan's banks. Macquarie says Japanese banks average a slightly lower common equity ratio than the 7% now required under the new Basel III rules. Citigroup says some of South Korea's smaller banks also don't quite make the grade. Analysts say banks here probably still won't need to raise a lot of capital, and that's because the new rules will be phased in over several years. Chinese banks are in pretty good shape, though, because there was so much concern last year over record lending. China's bank regulators imposed stricter requirements on banks there, so most of the big banks' capital ratios are above the new standard. For CNNMoney.com, I'm Eunice Yoon.